You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means we are back once again. It is Thursday. It is 1:30 p.m. Central. Oh, actually, a little bit later than that now, 1:45 p.m. Central. You'll see why in a second. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are binging these days. If I sound back to normal, it's because I'm back in the Chi-Town studio. I was down the street in Cibo proper, recording the option block with our good buddy, the Flowmaster there. But I raced back. I'm like the mailman, listeners. No rain, nor sleet, nor surprise live show will keep me from my appointed round. So we are back a little bit later than usual to talk all things twice. Only 15 minutes. All that, listeners. All it cost you was 15 minutes. Of course, if you're listening on demand, you won't even notice a thing. Just hit next on your device of choice. And of course, if you're hanging out in the Pro, have a good time in there. Make sure you want to check it out for yourselves. Theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on the old CME Group hot seat this week, I'm pleased to welcome back a guy I was just talking to, Mr. Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back to the show, sir.
Always a pleasure to be here, and very impressed of your timing from getting from the Cibo back to your studio, having walked downtown, especially in 40-degree yucky weather like you have today. And you probably had a lot of equipment that you had to haul with you. Very impressed that you were able to pull that off.
I'll even add to the mix. Do you notice a little bit of a costume change here, sir? You made the right choice not coming downtown to record with the Flowmaster. Let me just say, because I start off my day, I get my morning briefing every morning, and the briefing starts off today with, this is going to be one of the worst flu seasons in ages. The flu is horrible. It's really early. And then I forgot about it. Then I go to see the Flowmaster, and we're locked in a small room, and he is coughing and just sweating. He looked like he had dengue fever. He looked horrible. And he's literally coughing all over me as I'm doing the show and blowing his nose. Like, what are you doing? Why did you ask me to come here to do it? So I had to come back to the studio and burn all my clothes, Uncle Mike. and cleanse myself. I'm popping some, what is this, Zycam right now. I know I'm getting it. I'm getting hantavirus or whatever the hell he has, Uncle Mike. So what I'm telling you is that you made the right choice not coming down today. You feel a little better about that, sir, now?
I do. I actually was down there last night for a meeting, but didn't have to be there today, though, so that's good.
You dodged the hantavirus bullet. We'll see if I make it through the rest of the show. If not, if I just collapse at some point during the show, Uncle Mike, A, take over the show, and then B, send a death threat to the Flowmaster. Say, see what you have done.
If you collapse, I will agree to send a death threat to the Flowmaster.
Okay,
you have my word.
There we go. My dying words. I spit hate at thee as we keep on rolling right on into the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we see what's lighting it up to the light side and to the dark side. It's going to be a lot of moving and shaking on the show today. Mr. Uncle Mike, I will let you run with this. Before I do, really quickly, let's just pull up the chart from this week and compare to last week, listeners. And looking at it right now, this chart, as you might assume, pretty heavily biased in one direction, listeners. It is, I'm going to say, about 80-20, maybe 85-15 red over green this week. So pretty much everything at CME, with the exception of a few things, is fully in the red this week. Also, the largest percentage loser, or just mover of the week, really, is to the downside as well. I'll let you guess what that is in a second. But Uncle Mike, I'm going to chug some more of whatever this anti-cold beverage is. Why don't you have at it and lead the folks to the light side and the dark side, sir?
All right. And now, let's see, in my previous life, I think I was a sports announcer. That was one of my all-time dreams. I've always wanted to be a game show host. I've always wanted to be the guy that introduced the Chicago Bulls in the 90s. I think I could have been good at that.
You should have run to the booth during your high school football games when you're coaching. Just slide off and do a little announcing on the side.
Well, truth be told, when my son was playing on the freshman team about 4 years ago, they needed a guy to do it, and I was just there to watch at the time. So I volunteered right away. They let me do it once, and they never invited me back. So they hired me as a coach instead. They're like, we don't want this guy doing this ever again. We're going to let him coach instead. Just keep his mouth shut. But let me tell you, for that freshman game, we were the St. Charles North Stars. There were times to where if it was a group tackle, they were tackled by a constellation of stars. There were all sorts of good things. I got the crowd hyped up, by gosh. And we almost won that game.
You got to live the dream, if ever so briefly, sir.
And here we go again. And now, coming at you from the dark side. In fifth place, we have consumer discretionaries down 4.21% on the week. Soybean meal down 4.38% on the week. Coming in at number 3, technology at 4.61 to the downside on the week. Number 2, which was number 1 last week, is silver at negative 5.38% on the week. And number 1, I got to say, folks, this excites me just to even be saying such things. Bitcoin, number 1 to the dark side at minus 11.88%, up from number 2 last week, where it was only down 2.75%. So in the top 2 weeks in a row, Bitcoin really does suck, in my opinion. Next, we have the light side, the happiness, where we have the bulls are in control. Coming in at number 5, we have feeder cattle. It's up 1.09 on the week. Percent, that is. Number 4, we have lean hogs up 1.83%. Number 3, we have heating oil up 2.54% on the week. It was number 3 to the dark side last week, where it was down 1.67%. So we have a little bit of a jump this week in the heating oil. That is always exciting. Coming in at number 2, we have secured overnight finance rate futures coming in for the 3-month, that is, coming in at positive 3.13% on the week. And number 1, even though it burned last week, apparently they put the fire out on it this week. The number 1 futures contract for the week, up 3.79%, is lumber. It went from the outhouse to the penthouse, being number one to the dark side last week at negative 5.02%, and number one to the light side this week at positive 3.79%. There you have it, Mark.
Wow, we should bring you in every week as our just weekly mover and shaker guy. What do you think?
Gotta say, I do enjoy this part of the show.
Clearly, you can't disguise it. So while I'm getting dragged down by the hantavirus, you're lifting the rest of the show up. So I appreciate that out there, sir. By the way, you should maybe think about hitting some bids on your BitcoinReallySucks.com. Today might not be a bad day, sir. You might get some buyers.
There you go. So, folks, if you want to buy the domain, BitcoinReallySucks.com, go to GoDaddy. It is for sale.
When we start getting some nibbles mid-show, that would be absolutely hilarious. Let's see if the CVOL is hilarious this week. Let's just remember, you can run these reports for yourselves. Just type CME and CVOL, CVOL, into whatever browser you're running. That will get you to the dashboard. You'll have to log into a CME account. Will take a couple of seconds, and then once you're there, it's all free. You can see these reports. If you want to line up with the show, we go to the aggregates tab, and then we go set your high-low range to 1 week. I did notice not only is crypto not in our list of aggregates, but also, for whatever reason, there is no aggregate equities CVOL out here, which would be kind of nice to have on a day like today. But let's run down the aggregates. We do have listeners. To the energy, we go first. Energy CVOL, 62.5, up about 2.5 points today. Hanging out towards the upper portion of its weekly band. The high was 63.40 that it hit yesterday. The low, 59.46. So energy vol popping this week. Below, we have aggregate commodities CVOL, 39.59, up about 1.2 points today. The high for the week, 40.39, so right towards the upper portion of its band as well. The low, 38.31. Below it, we have the aggregate metals CVOL, a place where Uncle Mike likes to hang out every now and then. 25.67, up about 0.57 points just today. Pretty close to the high for the week of 26.12. The low is 25.10 out there, listeners. So kind of interesting stuff out here. Metals vol was popping last week and now kind of hanging out towards the upper middle portion of its weekly range on the vol front. Below it, we have FX. Again, not usually a hotbed of volatility, and that is the case today, hanging out a little bit shy of a 7, 6.98, up about a whopping 0.06 today. The high for the week, 7.05, the low, 6.92. So FX vol not really rocking and rolling this week. Below it, we have the ag products. Haven't talked ags on the show in a little bit. Hasn't been a lot to talk about, with the exception of soybeans. Soybeans have snuck in there a few times for obvious reasons recently. Off to the ags we go, 22.05 in the ag CVOL. Pretty much unched today. The high came earlier this week at 22.79. The low, 21.73. So pretty much a 1 point range on the week for the aggregate ag CVOL. Below it, we have the Treasury price vol, 4.89, off about 0.13 today. The range for the week, 5.04 to the upside, 4.6 to the downside. And bringing up the rear, our Treasury yield volatility, always our highest number on the list, even though energy is starting to catch up. 94, pretty much even right now, off about 3.5 points today. The low for the week, 87.22. The high, 98.13. So yield vol slinging around as it is wont to do. But you know, when Uncle Mike joins us on the show, there's usually a couple of categories that he wants to talk about. Unfortunately, one of those is really just having a day out there today. So I think we're going to kick things off in equities first.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
Uncle Mike, before I keep going here, our chat is approving of your performance as well. They said Uncle Mike did better than any guest previously on the movers and shakers. I don't know, Uncle Mike, maybe you're carving out a little niche. Movers and shakers guy, what do you think?
Well, I mean, if I can get in as like a game show host or an announcer, I mean, those are some of the things. Those are some of my childhood aspirations.
I get to see you rocking the Family Feud, giving the ladies all the hugs.
Survey says, see, I'm ready. I can do that.
I never knew your aspirations to be a game show host. See, these are the things we learn. I've been doing shows with you for over a decade. I know you like silver collars. I know you like a little bit of equities and some 10-year notes. I had no idea you aspired to be Richard Dawson from back in the day. So there we go. Listen.
I don't know if we want to go down that road, but
yeah, that guy was a little dubious. I was just thinking about
Monty Hall, Chucky Barris. Those are my heroes.
I was just thinking about him because he was in the original Running Man, obviously, and that is a great film. But I digress, listeners. We're kicking it off in equities. Why are we going to equities? Well, equities are having a day. They're having a week, but they're having a day, listeners. In the short time that it took me to get from our studio here in Chicago down the loop a little bit to the SIBO headquarters and then fire up the machines for the option block where the Flowmaster proceeded to just cover me in hantavirus and plague from head to toe. And then, of course, during the show, we started off up strong on the back of Nvidia earnings, and then just everything got its clock clean. By the time I got to the SIBO, the S&P was off. Not only was it backed in the red, it was off about 0.5%. As the show progressed, off about 1.25%. Then rallying back to almost unshot. Now as we're coming back into it, the S&P is off 0.75%. Dow only off about 0.25%. So Dow just shaking it all off. NASDAQ off about 1.25%. Our good buddy, the S&P vol, aka VIX, hanging out right around 25.60 right now. So things are looking spicy. We are whipping and sawing all over the place. So if you need an argument, maybe that some intraday action is up your alley, today is one of the days. Multiple 50-plus point swings in multiple directions in the S&P out there. On the back, of course, of Nvidia earnings. Everyone thought Nvidia was going to ride to the rescue of the markets. And for a brief shining moment, it did. And then apparently, Uncle Mike, you and your buddies forgot to hit the buy buttons because we started turning to the red and have kind of been hanging out in various shades of red ever since. Obviously, we've seen a little bit of red in the S&P lately as well. So what are your thoughts on the tumult we've seen of late in the S&P? And then, of course, today's just not quite mother of all whipsaws. I think the April timeframe might take that, but pretty darn close, sir.
Yeah, today is quite the whipsaw day. And for those of you listeners that are day trading S&P E-mini futures, you're either having a really, really, really good day or a really, really, really bad day. One of the two. If you're the type of day trader that just puts a trade on, maybe a 2-point stop loss, whether you're long or short, and you're able to catch the move that's happened today, there's a whole lot of grinning going on, mostly by you. But if not, then there's not so much grinning, so to speak. But in terms of what I'm seeing right now, we opened the day on the rally from the Nvidia earnings, and then right around 9:30 or so, we just start to crash. And we've had such the move today to where we were positive 110 points on the day at one point in time at the highs when we were at 67.70. We came down to 65.53. So that's a 217-point swing from the high to low of the markets. We're closer to the lows right now. We're at 65.80, and I'm quoting the cash, by the way, not the futures. But on here, you're seeing that there's some action going on today. So a couple of things that I'm seeing, if we go back a little ways, the low that the market hit on October 10th, we didn't quite hit that, but we came within a couple points of it today. So the case for the bulls would be maybe we are bouncing off of or coming close to bouncing off of the October 10th lows. It'll be interesting to see over the course of the next 55 minutes or so before we close in the cash markets what happens and how this is going to play out. So that's one area with which you could make a case for the bulls. Now, the other thing that I think is important to look at on here, we're still not that far off from the all-time highs. So just doing some quick caveman math here, it looks like we are just under 5% off of the all-time highs. And so what is a pullback? Is a pullback when you're 10% below the all-time highs, or when it's a bear market technically, when you're 20% below? I don't know. I don't really get into all that, quite honestly. But 5% off the all-time highs, which we did hit a little bit earlier today, That's something to where it kind of makes you think a little bit. So I think we need to keep things in perspective. We are in a very strong market. There's no question about that. But rallies and big moves begat big pullbacks, and we have not had a very big one as of yet. So I think it's important to be cautious out there, but also to keep things in perspective. We're not that far off the all-time highs.
Yeah, looking right now, even with today's meltdown, we're still up about 12% for the year in the SPX. So, and of course, from the nadir back in April, sub 5,000 in the S&P, we're still up over 1,500 handles. So not a bad run there, Uncle Mike, even if we are giving some back out there today. And speaking of giving some back, yeah, the E-mini options listeners, I think to call them active this week is underselling it. Usually coming into the show on a regular weekly Thursday, we're seeing 2.5 million contracts, 2.8, maybe 3.5 if things are starting to get kind of wild out there. 4.6 million contracts already changing hands in the E-mini this week, listeners. Just absolutely wild paper. There's no way we're going to even be able to crunch a fraction of that here on the show, listeners. I mean, it's just wild stuff. While you were talking, Uncle Mike, I did pull up a couple of interesting things because I know you're very interested in all things 0 day. And also, obviously, that's what drives so much of the flow on any given week or any given day, really, in the S&P. I don't care what your flavor is. E-mini, SPY, SPX, all of them have 45 to 50% of their flow expiring within 12 to 24 hours. It's just absolutely wild. I'm looking at the strikes and the options that are lighting it up today, Uncle Mike, in the E-mini. This just gives you some sense, some frame of reference for how much we are whipsawing around. If you just look at the 0 day, the expiring in pretty much today options out here, listeners, we see 6,500 puts lighting it up today and the 6,800 calls, about 12,000 of the puts and about 13,500 of the calls. Uncle Mike, when's the last time you can think of you had same day options trading roughly 300 handles apart in the S&P, sir?
That's something you don't see very often. I don't know if we've been doing this show we've been doing this network or the shows on this network a long time. I cannot say I recall such a thing.
Yeah, a total of 50,000 of the 6,500 puts have traded all week if you add up the whole week. But today, about 12,000. Looks like people have been closing these all week long, which is kind of interesting. So there was some size OI open on that strike. And about nearly 30,000 of the 6,800s have traded this week, which is a level we kind of flirted with early in the session on the rally. We're not quite flirting with 6,500, but we are in the 6,500 land, right around 6,575 or so in that ballpark. So again, it is not out of the frame of reference that we could see the S&P threaten a 6,500 level later on in the session if the sell-off continues after a threatened 6,800. Again, kind of wild stuff out here, listeners. And if you want even more optimistic, how about the pars, the 7,000? Yeah, that par. Those calls also trading. These expire in about a day. So you got a full 24 hours, listeners, to hit the 7,000 strike, including about 12,000 of them today. Uncle Mike, I think you're pretty optimistic. You're probably one of the more bullish, optimistic guys I know. Was a 7,000 strike in your calculations this morning coming into did even you think we could get that high in about a day?
I can't say that I was buying any 7,000 calls today, but I mean, the beauty of the 0 DTEs is that you can get a lot of bang for your buck if the markets move. And I guess if someone wants to have a hunch, bet a bunch, there's not a lot of risk to it. The only risk is what you pay in premium.
Yeah, it seems like, Uncle Mike, as I'm digging through here a little bit more, it does seem like a lot of people are lining up. The 6,500 to the downside is the new hot, sexy level. For a long time, people were looking at 6,800, 7,000. It seems like a lot of paper lining up there, including today, going out a little bit. So not just 0 day, listen. Let's go out an eternity in the equity world now. Nearly 8 days. Oh, my God. Wild stuff. Over a week. 6,500 puts expiring in 8 days are lighting it up to the tune of nearly 30,000 contracts this week. About 20,000 of that changing hands today against an OI of 5,600. So obviously a boatload of 6,500 puts expiring in a little over a week. I'm going to see if I could find some prices on those for you, Uncle Mike. But that said, I know you're a bull, but that said, 6,500 in about 8 days. I mean, we could theoretically be there by the end of the day, sir. What are your thoughts on that level?
Yeah, you're right. If we keep falling like we have, we could be. But I think this really shows the tail, the zero DTE revolution that we've had the last couple of years. I really think the tail can be wagging the dog. And I've talked about this on the option block before, but I really believe that if I'm a fund manager and you have a 200-point move to the downside, I'm not feeling very good when that happens because I'm in I'm in a coin toss situation that I can't win. I can win, but it's very difficult to. If I want to sell all my stocks, then I'm worried that the market's going to go right back up and I'm going to be the idiot that sold the low. However, if I don't do anything and the market goes down another 8%, I'm the idiot that just sat there and watched it and did nothing. The zero DTE helps, if I'm a fund manager, it helps me to not feel like an idiot. If I'm really concerned on a day like today and I want to go to lunch and chill out with my buddies or whatever, I can still live a normal life if I purchase a zero DTE put option. If assuming my portfolio matches what the S&P does to the downside and it's correlated and that type of thing, of course, but I can live a normal life. So if I were a big stock fund manager, which I'm not, I'm on the option side of things with our portfolios that we manage. But if I am on the stock side of it and I'm allowed to buy these zero DTEs, that actually makes my emotion feel less bad. I know that if the market snaps back, the worst case scenario, oh crap, I wasted money on that zero DTE put, which wasn't that much because it was only a 0 day or a 1 day maybe. And if the market does crash, then I'm not the idiot that did nothing and watched the market go down when I had a chance to do something. So I believe that zero DTEs have done a couple things. One, I think it's stopped crazy mad sell-offs because of what I just described. But number two, it's given us some volatility spikes that we normally would not have had, in my opinion. And I would reference August 4th, I believe it was, of this year. And I'm sorry, April 4th of this year and August of 2024, to where both times, if you look at how volatility was priced, it was definitely more than a typical down day should have been in the market. And I blame zero DTEs, which is something that we're really looking at, or we're trying to take advantage of a lot of times with the funds that we manage at RCM.
I was just going to ask you, I know you've been looking at them a bit. Have you found any ways to utilize them yet, sir?
No, I haven't found any ways to utilize the zero DTEs, but the things that we have done, though, an example that's made our whole year was in April when the markets just crapped the bed, but volatility just went up through the roof. And so we came into the year the way that we hedged our hedge strategic night portfolio. We just bought some puts on the S&P. And what we were waiting for, because we studied this, or we had this discussion last fall based on what happened in August of last year, what we were waiting on is some type of a vol spike. Well, we got our wish in April. And so what we did is we used that as an opportunity to leg into a put spread. When volatility just went through the roof like it did, we were able to sell a put so ridiculously far out of the money to where initially our protective put was roughly 3% below where the S&P was. And we're like, okay, well, we're theoretically paid a lot of money for that, but we're fine. We went a year out with it. And then when we had that vol spike, like we did in April, yes, the market went way down, but of course the vol spike just to very high levels, we were able to sell an out of the money put, meaning we legged into a bear put spread for a price that covered a majority of the cost of the put that we bought initially. And so by doing that, we could still look our clients in the eye and say, yes, we did limit the protection, but we limited it to roughly a 30% loss in the S&P. we're fine with that, because if we're able to protect 30% a 30% loss and the market goes down 40, we still feel that that's okay and that's among acceptable risk parameters. So that was something that we were very proud of. And then the markets came back. And when the markets came back, volatility went way down. We bought back that short put option and we covered a majority of the cost of our hedge for the year. So we believe that zero DTEs, at least in those two instances, have played a big part in what volatility can do to option pricing. And that's how we're playing it right now.
Let's look really quickly, see how some other people are playing some of this out here, because it's just such a wild day in the equities. We could spend the whole show just looking at all the wild prints here. I couldn't find prices on those 6,500s going out in 8 days, Uncle Mike. But how about if we go all the way out to December, because actual December is trading up quite a bit today as well. I know it sounds like an eternity going out nearly a month, listeners, but a lot of that going up today, including D6500 puts trading for $77 today, Uncle Mike. So again, that 6,500 strike does seem like it's where a lot of people are lining up right now. If that's still a little bit too close to the fire for you, how about the 6,300 puts in D's trading for about $50? And some folks even lighting up, in fact, a fair amount of the D's 6,200 puts going up as well. They say average price here for about $45. That seems like that makes the 6,300s look cheap by comparison, only $50. But that said, Uncle Mike, any of those floating your boat? D6200s for $45, 6,300s for $50, kind of interesting there, and the 6,500 puts for $77. And what are your thoughts on that 6,500 line, sir?
Well, I think that 6,550 is kind of the line that I'm looking at right now from a technical standpoint. Not that I'm a technician by any means, but I think that it's definitely not a bad spot to be in the 6,500 level. Right now, for one of the short-term portfolios that I'm working with, not short-term, but one of the ones where I'm using short-term hedges, we're right around the 64.5 level. And so that's kind of an area to where if we do break the 6,550 level, then we could have a lot more room to the downside. I do think that the 6,550 level, where we are about kind of sort of right now, as we're doing this show, or 6,580, whatever contract you're looking at, I think that there is a pretty good case for some strong support here, just because we tested it on October 10th and we're about 5% off the all-time highs. So we might be at our support level right now.
All right, listeners, we could keep talking equities probably for the rest of the show, but let's get out some other categories that have been top of mind of late and certainly are lighting up Uncle Mike's tape. And are they lighting up the rest of the market? Let's find out as we head on into the metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everyone, pop out of that equities, drop down. You're going to go all the way to the bottom of the list, to the metals. We'll kick things off in the king of the metals, a.k.a. gold. Gold looking a little bit off 4,100 right now, 4,081 to be precise, coming into this portion of the show. So still north of that pivotal 4,000 level, but maybe not popping as much as you might think, given all the madness out there. But again, just wait 5 minutes. A whole different ball game. What certainly is popping is the volume on gold right now. Again, usual week for gold, 225, maybe 250,000 contracts. That's an average week. We are over 100K beyond that right now, closing in on 360,000 contracts on the tape in gold options. So that is a fairly active week. Once again, folks, maybe looking for a little bit of flight to quality in these mad times, or maybe they're thinking gold ain't quite the quality asset it once was, given just how much it's run up out there. Speaking of which, Mr. Uncle Mike, our question of the week right now, and you and I were talking about this earlier on the option block, is along these lines. We're asking our audience, quite simply, if you had to buy and hold an at-the-money call through the end of next year, not this year, but next year, listeners, 2026, on one of the following assets, which one are you choosing? We gave you 3 choices and the infamous other, Bitcoin, gold, and the S&P 500. And Uncle Mike, Bitcoin still taking it with 40%, but down slightly from where it was, I do believe, on the option block. 36.7%, so slightly over a third coming in for gold. The S&P ticking up slightly. It was only about 12% on the option block, up to about 13.3%, but still no love for the equities. And a full 10% going for other now. Looks like some write-ins for some funky cryptos that I know Uncle Mike loves, including iTrax IG, everyone's favorite out there. But Uncle Mike, what are your thoughts on gold coming in a firm number 2 in our poll to your beloved Bitcoin, and your thoughts in general? I know we talk a lot of silver, but what are your thoughts on the action we've been seeing of late in the king of the shiny stuff, sir?
I mean, where I'm at with gold and silver right now, the party's got to end at some point. It's not going to go up forever. It's never gone up forever. The S&P has been going up forever, and I think it will go up forever. That's just me, but I think it's kind of high right now. Well, it is high. It's very high right now. And I could see, I'm not saying that it won't go higher, but I think there's better ways with which to find more likely ways to make money at this point than in the shiny stuff. I mean, it's like, if you go back historically to, I'm just randomly picking something on a 20-year chart, August of 2011, when gold looked like it was at an all-time high, as was silver. And you go all the way out to December of 2023, that's 12 years to where it really didn't move that much. I shouldn't say it didn't move, but it went from 2,000 to 1,000 about, back to around the 2,000 level. So, I mean, that is a lot of intermovement or movement within it, so to speak. But you endured quite a bit and you really didn't get anywhere. So at this stage, the fact that gold has more than doubled since the date with which I've referenced 2 years ago, when it's more than hit a double, times like that, I think it's going to cool off a little bit. So I think that, along with silver, I would not, given the choice between the three of them, anyone that's listened to me on any of the shows knows my opinion on Bitcoin. I'm not even going to address that. But gold, me being the bull that I have been with silver for my entire career broadcasting on the option block, quite frankly, up till a couple weeks ago, I think there is a time that you need to take away funds, or it's Miller time, and I'm not talking Miller beer. It's Steve Miller time. Take the money and run. So that's kind of my view on the shiny stuff at this stage.
Steve Miller time. Interesting out there. Is it Steve Miller time in gold? Well, listeners, an interesting week. If you want to turn gold into a virtual 0-day product, all you have to do is get close to DEIS expiration. DEIS is popping off in a little under 4 days now in gold, and that's still where 48% of the flow is going up. Gold heads, for whatever reason, just love the December expiration. That's where they all like to hang out. And again, a very active week, nearly 50% of the flow once again going up in this wild contract that expires in under 4 days. If you're wondering, what is DEIS vol in gold? About 18 3/4. But let's go out a little bit farther. That's off about 4 points, by the way, 4 1/4 points. If you go out a little bit farther, let's go out, let's say, into January, out a little over a month. And then you got a vol of about 20.85, coming back to earth a little bit right now, off about 1.3 points. So kind of interesting to see what's going on from a vol perspective. Skew-wise, you usually come into the shiny stuff expecting a bid to the upside and a discount to the downside. Not really seeing that in the 4 days to go contracts, but then again, that stuff's moving around so much, it's kind of hard to really sink your teeth into the skew. Right now, the skew is mostly flat, slightly positive to the upside, 1% bid to the calls. About a 0.5% bid to the puts, which is kind of wild. Again, shows you just how weird these near-dated contracts are. But then again, anything within a point to the at-the-money is pretty much flat in my eyes. If you go out a little bit farther, let's go out to Jan again. Then we start to see the echoes, the shadows of a more traditional precious metals skew, listeners. The calls were 2.5% bid last week. This week, nearly 6% bid, so ticking up a little bit there. And the puts were about 0.8% cheap last week. This week, 3.8% cheap. So a more traditional, if muted, precious metals skew out in the Jan cycle. By the way, that future is hanging out at about a 41.17 versus a 40.81 on that front future. And the vol in January is at about a 20.85, off about 1.3 points. But what is lighting up the tape yet again this week is this. I mean, we joke about the equities having, some nonsense paper obscuring the flow. Well, we're seeing more and more of that in gold now. Maybe that's part of the reason why we're 360,000 contracts already, because whoever is slinging these 2600s in December continues to do so for more and more size every week. This week, 17,000 of the 2600 calls in December have traded. So once again, those nonsense calls are your leading most active contract. If you dig into some of the flow, you'll see it's also driving a lot of the flow around December. We've got 2,600, 3,200 vertical going up for, guess what, $600, 2,300 times just today. 2,600, 26 quarter trading about 1,750 times. 2,600, 3,300 trading 1,500 times. And we got just a lot of 2,600 nonsense verticals going up. So that's kind of obscuring some of the waters out here. In fact, it's trading again, just today. So just wild stuff out here. They traded it many more times earlier in the week. So kind of wild stuff. This is the real reason I wanted to have you on the show, Uncle Mike. Why do you continue to gum up the gold waters with your obsession with the Dees 2600, sir?
I mean, that's just what I do. I mean, it's just the 2600s. When I want to go below something, I go below something, and that's just how I roll. It's all me. Not really.
Don't all your friends call you in the money call Tosaw? That's just the way you like to roll, sir.
Oh, I kind of like the ring of that. In the money call Tosaw.
There you go. That can be your announcing handle. And on the mics this week, in the money call Tosaw, announcing your local girls soccer game, whatever you got going on out there.
I like that.
Out there in St. Charles. Let's go a little bit farther out to some more non-2600 4-day to go paper listeners, shall we? Let's go out to Jan again. It's the 4400s that are leading the dance in January right now. About 6,300 of these trading. The big day was actually Monday. About half of those going up, about 3,000. It's like slightly closing. 2,300 on Tuesday, almost 1,000 today, only about 300 and change on Wednesday. The OI coming into today about 5,500. So anyone's guess, 4,400 by January. That seems like it's a long way to go and a lot of upside. But then again, I was saying that about Dees 4,000s, and we blew through that without much effort out there, listeners. So I don't know, Uncle Mike, Jan 4,400. I mean, doesn't sound like, from what you were saying, that strike really floats your boat. But what are your thoughts on the persistence of upside in the metals, sir?
Yeah, I think that would be a great one to sell personally. So I think that's a little bit too optimistic for me, especially when I'm not quite as optimistic on the shiny stuff as I was.
I think given the way you're feeling now, if you sold those calls and got taken away, you would be a very happy camper.
No doubt.
Let's look really quickly at your beloved silver, since we are talking metals. Silver back down to earth a little bit, not from a valuation perspective, but from a volume perspective. Back to about the normal range we expect, a little bit north of 50,000 contracts right now, about 53,000. So silver not getting the leg up that gold is. Also, apparently no one's working the deep in the money call vertical action in silver that someone appears to be obsessed with in gold. Silver coming into this portion of the show a little bit north of the 50 handle, 50.4. Uncle Mike, you already said it. You said you kind of out on the metals, at least for right now. But in general, it has to be wild to you to see a 50 handle in silver. I mean, it wasn't that long ago on the show we were talking about ratios and upside spreads that had a 40 handle in them. And we thought that was kind of wild. And here we are now, sir, with a 50 handle. What are your thoughts on these just extremely lofty levels in your beloved silver, sir?
Yeah, it's something to where I've been talking about a 50 handle for 10 years, but we've never come anything close to it. And so it's kind of like when you have a childhood dream, when you're you have your boyhood dream you talk about all the time, and then when you grow up, it actually is happening before you. It kind of feels that way, and that not quite to that extreme, but I've been telling clients, we'll ride silver. We'll talk about getting out when it's in the upper 30s, 40s. And it's staring in the face of 50. So this is craziness.
I was talking to an old timer at the FIA conference this week who remembers the days of the Hunt brothers, Uncle Mike, back in the late 70s, which was, of course, the last time that silver kissed a 50 handle, listeners. And he was telling me that back then when that happened, his wife raced down to the local Holiday Inn. I guess there was a metals buyer there. I don't know why he went to the Holiday Inn, but she went to the local Holiday Inn with all of his silver dollar collection and hit all the bids. And he was very happy to do it. And that was the last time he saw a silver handle. So I guess what I'm telling you, Uncle Mike, is as soon as we get off this show, you need to race to your local Holiday Inn and hit some silver bids. What do you think?
I don't think I have any exposure to silver, even physically. So I think I already hit them.
No grandma's jewelry burning a hole in your safety deposit box. Nothing fun. All right. Well, I'm just telling you. I hear good things about the Holiday Inn to sell silver. That's all I'm saying.
Good to know.
Little pro tip for all the folks out there looking to move some silver. You're looking to move some silver this week. Looks like it was the 36% of that flow, again, going up in the Dees contract, going back to my thesis that precious metals traders love nothing but December. And once Dees rolls off the board, it'll be December of next year. Everyone's fixated. For whatever reason, end of year and the shiny stuff just lines up. 4 days to go on this contract, a little bit less. The vol 50.5, but again, take that vol with a grain of salt. If you go a little bit farther out the term structure, it's at about a 51 though. So silver kind of hanging out in a decent vol level right now. In terms of skew, we are seeing those calls about 4.2% bid going out in about 4 days. The put's flat, so slight upside action on the calls. And this is probably the reason why, looking here, we see the 52 calls in silver leading the dance this week with about 1,500 of these going up. These are going away in less than 4 days, listeners. So 52, I would have said that was wild not that long ago. Now just about anything is possible. They've been trading pretty actively all week long, about 1,500 times. The big day was actually yesterday, a little over 500. Nearly 400 going up today, about 300 on Tuesday and about 300 on Monday. So pretty active. I'm guessing, Uncle Mike, you're out on a 52 call in silver with 4 days to go. But let me see if I can dig up a price for you really quick, sir.
Yeah, I don't know if I would. Not sure if I would want to be long a 52 call in silver 4 days out.
So about 24 cents. What 24 cents? What else are you going to do with 24 cents, sir?
Oh, how can you go wrong?
Throw it away on some D's 52s. I can't think of a better way to spend 24.6 cents myself, sir. But hey, that's just me, listeners. Well, Uncle Mike, we've already had a fun little sojourn here on the show. We probably got time for one more complex, so I'll let you choose. Do you want to get on your boat? Do you want to dive deep into crypto? What is floating your boats? Do you want to talk soybeans?
As much as I want to talk soybeans, honestly, but I know so little about it, I can't add anything to it. So I'm going to jump on the boat with a 10-year note.
All right, listeners, to the rates we go.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody, to the rates we go. We're going to pop out of that metals, and we're going to pop just one slot above it in the asset class list to rates. We're going to go into, obviously, in product family to U.S. rates, unless you're really excited about EU rates, but we're not going there right now. And then in product, we're going to go all the way down, such a huge list. Going to go about 2/3 of the way down to the 10-year. Listen, that's where we're hanging out there right now. And is it a spicy week in the 10-year? Well, the answer is yeah, 4 million contracts, about 4.01 million contracts to be precise, changing hands in the 10-year right now. And we got Dees rolling out in about a day, putting up 43% of the flow. So once again, everything is 0 day all the time these days, Uncle Mike, including the 10-year. Nearly half of 4 million contracts in the 10-year set to go away in 1 day, sir. What are your thoughts on that? And in general, what are your thoughts on your beloved 10-year note boat?
Well, I think that everybody what's happening right now in the interest rate world is everyone's saying, oh, interest rates are going down. Look at the CDs. They're not quite paying as much. And that's true. They're not. But if you take a deeper look at things on the actual treasury rates themselves, the 1 month treasury is still above 4%. Just looking at the rate yesterday, 4.01% yesterday. The 3 month is below 4% right now at 3.95%. 2 month at 4% on the nose. But you have that, and if you're going to buy a 1 year CD, for example, the rate to kind of tie it to, it won't match exactly, of course, but the 1-year Treasury is at 3.68%. So we still have yield in the very short term government treasuries. And that's something that needs to be mentioned, is because if you're trading 1 to 3 month, then there's still yield there. Now, in the 10-year, we are actually slightly ahead of that. As of yesterday, on the 10-year yield, we're looking at 4.13%. So we do have that going for us, and the fact that we don't have necessarily an inverted yield curve, with the exception of the 1 and 2 month treasuries that are still hanging out above the 4% level. If you go out to 20 years, you're at 4.71. 30 years, you're at 4.75. So about 7 or 8 months ago, or the last time we had talked, or a while ago when we talked about this on the show, we kept talking about the inverted yield curve, where short-term rates were greater than long-term rates, but it's not necessarily, it's kind of the case today, with the 1 and 2 month and the 1.5 month being ahead of some of the shorter terms. But if you look at the 10-year, the 20-year, and the 30-year, those rates are all higher the further out you go. So I think we're coming into a more normal market, so to speak. And by normal, meaning not the inverted market. And whether or not interest rates are the way to get long or short on, I think that's going to be a very interesting question over the course of the next few months. We have the Fed meeting coming up, and I believe it's December, and that'll be Powell's last one. And after that, Trump's going to get his guy in, whoever his guy is going to be. And I really don't see him getting a guy in that's going to want to raise rates. Trump said himself many times, I'm a low interest rate kind of guy. So even though we may have reason to believe that we're not going to lower rates there, and I'm not trying to be political, I'm just basing it on what the president has said. There's good reason to believe, in my opinion, that if he gets his guy in, which I think he will, that next year we could see some lowering of interest rates and a gain in the bond world.
There is no way that Trump is nominating anybody who doesn't say, yes, sir, cutting rates every quarter for the rest of the year. If you don't say that, I don't think you're getting the job. But hey, who am I to read the political tea leaves out there? What that means for the market, we shall see. What it means right now, listeners, is a whole boatload of 1 day to go treasuries just slinging here. I mean, gold, not known to be a 0-day product, lighting up the tape this week on the very near dated front. Equities obviously are 0-day. We expected there. And now the 10-year falling into that. Again, over 4 million contracts, 43% of it going the way of the dodo in 24 hours, listeners. If you're wondering, that front future at about a 112.28, 285 to be precise, if you really want to get granular. And it's the 113 calls that are lighting up the dance today, and indeed all week. They've traded nearly 300,000 just this week. So again, for frame of reference, these 113s expiring in a day have traded more than, well, not quite more than gold, but almost as much as gold. Definitely about 5x, almost 6x silver. Again, that shows you how much action is going up in this complex. 134,000 of that just today. Just today, 134,000 of these 113s have changed hands, listeners. The other big days, 61,000 on Tuesday, 60,000 on Monday, 32,000 on Wednesday. Seems like mostly closing throughout the week, which is kind of interesting. So I guess as we nibble a little closer to that 113 level, folks are getting the heck out of Dodge. There's still 217,000 contracts open coming into today. So this could be a lot of people bailing today. Roughly a little over half of the OI has traded today. So it could be a lot of folks getting the heck out of Dodge, but that is a wild tsunami of near-dated paper. If you want to go a little bit farther out, but similar volume level, let's go out to Jan, the 114 calls. In fact, they're trading almost identical volume levels, about 280,000 versus 286 of the 113s expiring in a day. Now, if you go look, it's not all straight-up rolls, because only about 59,000 of the 114s have traded today versus obviously a lot more, 100,000 plus of the 113. So if they're rolling today, they're doing it 2 by 1 basically, which is usually not a good sign. But either way, nearly 280,000 of these 114s in January are trading out there as well. By the way, the Jan vol, if you're wondering, about a 5. So don't get too excited by the vol or the skew in the 10-year, because it's not really why you're coming to the dance. The big day for the 114s was actually Wednesday. 109,000 going up then, mostly opening then. 63,000 on Tuesday and about 50,000 on Monday. Again, opening all week long, so it does line up closing to opening wise. That looks like maybe some folks could have been rolling out here for a whole month to roll out to January. It just doesn't line up size wise. Kind of interesting. The OI coming into today, about 250,000 contracts. So there is some size open on the 114s in January in the 10-year. All right, that music means we've come to the end of an epic sojourn. We have kept Uncle Mike beyond his appointed rounds long enough. And also, I've been battling with this hantavirus. I survived the show, Uncle Mike, which is a good sign. So far, I have survived the Flowmaster's plague, but I don't want to push my luck too much here. So I do have to save some voice for the hot options report coming up later today. In the meantime, Mr. Uncle Mike, sir, if folks want to talk silver or the 10-year or equities or maybe your beloved Bitcoin with you, where should they go? What should they do?
Head to stcharleswealth.com if you're looking for a financial advisor who lives in this space, should it be appropriate for the client, of course. Would love to have a conversation with any of our listeners.
And then, of course, you know where to go to check out these reports for yourselves. CMEgroup.com/TWIFO, TWIFO, the place to go to kick the tires and light the fires. That's going to do it for us on TWIFO this week. Back again after the closing bell today to talk, some wild flow. It's going to be a wild one on the Hot Options Report. If you're not listening to it, you really should check it out on a day like today, listeners. It's going to be kind of wild. That's coming up after the closing bell. Back again tomorrow. Dr. Vix and other assorted crazies in hand to talk some vol on volatility views. Then, of course, we come back for the pro folks to wrap it all up with the official after party of volatility views, known around the globe as Options Oddities. Then, of course, we wrap up the week for all of you on the Hot Options Report. Then we're back again on Monday. Uncle Mike will do some trivia battling on the option block. Obviously, no show next week for the Thanksgiving Day holiday, so no TWIFO, unfortunately. But we're back again in 2 weeks. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.